you're watching this video, you have probably failed a prop firm challenge before, or maybe you're thinking about taking a prop firm challenge, but you're worried about failing. I myself have been there. The very first prop firm challenge that I took was an entire month's worth of rent, and I was so worried about losing that money and failing the challenge. Fortunately though, I actually passed that challenge and went on to pass several more. And I did so because I learned two frameworks that can help you achieve a 100% success rate when taking your prop firm challenges. But I've also been running my very own prop firm, Lark Funding, for over 3 years now, seeing over 10,000 traders take a prop firm challenge. So I have seen firsthand what makes the difference between a trader who repeatedly fails and one who passes and makes money. So in this video, I'm going to walk you through the two frameworks that will help you to never fail a prop firm challenge again. Okay, so first things first, a little bit of additional proof for why you should even listen to a single thing that I have to say. Over here, you can see a few of the FTMO certificates that I earned. You can see an FTMO pass certificate. You can see two challenges that I've taken at my own firm, Lark Funding. Now you might be thinking, oh, that's fake, but I've actually shared on this channel and in a free school community down below all of the trades that I took. I recorded videos live. In that school community, I helped another trader pass a 50K live account. Here you can see one of the trades that I took on the challenge, and I think there was something else up there. No, I think that is everything. So, this one right here, when I passed my 7th 100K challenge, that was back in November of last year. So I am by no means, a 10 out of 10 trader, but I have taken many challenges and I think I have a pretty good ability of passing them. So framework number one is the Drawdown defense protocol. And this framework is going to help you dramatically increase your win rate and decrease your losses. But not only that, when I used this on my challenges, it made a massive difference in terms of the amount of stress and anxiety that I had around failing the challenge, because we have to take into account too the emotions and the psychological sort of toll that these challenges can take, because they can honestly be really stressful. So the Drawdown defense protocol, the purpose of it is to eliminate the death spiral losses by teaching traders exactly when and how to cut risk. The Drawdown defense protocol, what it suggests is that the moment you hit drawdown, you need to cut your risk in half. Now, it is my firm belief that if you actually implement this, it's going to take you longer to pass a challenge. However, your win rate will be close to 100%. Now, the caveat here is this is assuming that you have an edge, that you actually know what you're doing. If you're signing up for a low price challenge as sort of an educational practice tool, that's completely fine. This is assuming that, you have a strategy, you know what you're doing. If you cut your risk in half, there's a good chance that your win rate could be 100%. And we're actually going to jump over to a risk of ruin calculator because I think that's a really, really powerful tool to use in your trading. The reason that this works is that it keeps you in the game long enough for your edge to play out. I've been so outspoken and adamant on this channel that I really think the key to success in trading is the law of large numbers. It's single-handedly the reason why I failed for 5 years before I passed my first challenge, because most traders, when you have a few consecutive losses, you start to rethink everything. You start to change your strategy, start to think that you're doing something wrong. But the reality is, even the best traders in the world, they have losses, and you don't always have to learn something from your loss. The loss is just part of the law of large numbers. It's going to happen, but as long as you keep executing your strategy the exact same way, your edge will play out. So that's why the law of large numbers is really so important. Now, I want to jump over to a risk of ruin calculator because this, for me at least, made a massive difference in my trading because it helps to actually see the numbers, right? What are the odds of you blowing an account? What are the odds of you failing a prop firm challenge? When you see traders on Twitter and Instagram saying, I turned $1,000 account into a $100,000 account, number one, they're lying to you. But number two, even if they weren't lying to you, it's because they're just complete gamblers. They're not traders. And you can really see that when you use a risk of ruin calculator. So let's say your win rate is 55%. I like to be conservative, not just in my politics, but in my trading. So yes, you can have higher win rates, but you have to remember that your win rate has an inverse correlation with your average risk to reward. So if you're going to have a 2-to-1 risk to reward, you might have a 40% win rate, or vice versa. If you have, a really high win rate of, 65%, you're going to have a lower average risk to reward. I prefer to optimize for strike rate to have a higher win rate as opposed to, just having larger losses. So let's start at least on the conservative side. You're probably, an eager beaver and you're thinking, I've got a 70% win rate. I've got an 80% win rate. That's fine. I don't know if I necessarily believe you, but that's fine. Let's say 55% win rate with an average risk reward of 1-to-1, because I think that is absolutely achievable. Risk per trade, 2%. Let's see what happens. Max drawdown, I put it 10% because that is a classic two-step challenge. Even if we put 6% for our one-step challenge at Lark Funding, over 100 trades, your risk of peak to valley drawdown is 99.2%, meaning you have almost a 100% chance of having that 6% drawdown. Now, this is peak to valley, so it means probability of reaching 6% drawdown from an equity high to a subsequent equity low. So this doesn't necessarily mean you would lose the challenge if it has static drawdown. If it has a trailing drawdown, this is a 99% chance that you will lose the challenge. Risk of ruin would be a probability of reaching 6% drawdown on starting equity. So you have essentially a 50% chance of failing the challenge if you have 6% max drawdown, 2% risk per trade, 55% win rate, and an average risk reward of 1-to-1. Now, let's obviously drop the risk down. I would not encourage, 2% risk. If we drop it in half, your risk of ruin is 22%, and your risk of peak to valley drawdown is 65%. So we have static drawdown, so you don't have to worry quite as much about the peak to valley drawdown. It's really the risk of ruin, but that means 22%, right? That's more than 1 out of 5 prop firm challenges you could fail. And so you might be thinking, 1% risk, no big deal. But it actually is a big deal because there's a pretty high chance of failure. Now, you might have a bunch of money and you might be thinking, I'm going to play the law of large numbers. In terms of my challenges, I'm going to buy a bunch of challenges. I'm going to accept the fact that, 1 out of 5 or so, I'm going to fail. I prefer to not fail any. So in that case, if we go to 0.5%, right, our risk of ruin is now 3.9, which is much, much better. Now, this is obviously on 6% drawdown. If you go to 10% drawdown on a 0.5% risk per trade, your risk of ruin is 0.3%. If we go up, not risk per trade, 100%, if we go up to 1% risk per trade, you have a 7% chance of risk of ruin, which is, it's not high, okay? Again, I know I said I lean on the conservative side. It's not high, but there is still a chance of failure, right? And again, this is with a 55% win rate and an average risk reward of 1-to-1. If we pop that up to 60%, it drops down to 1.1%. So I highly encourage you to play around with these numbers. It's really powerful because it not only will help you see, well, what do I need to do to pass, but it will also help you determine what type of prop firm challenge you're comfortable with, because you need to know what the profit target is, and then you can play around with the max drawdown here as well. So it's a really fun tool. Moving on to framework number 2. It is the A+ setup filter system. The purpose of framework number 2 of the A+ setup filter system is to prevent traders from digging holes early on by being ultra selective at the start. For me, I say it all the time, momentum is key. It's hard to measure momentum, but everything in life, trading in life, this YouTube channel for me, the more content I make, the more content I want to make. You see that momentum, and I think it's really, really powerful in life. And so for me, this can make a huge, huge difference. So the key rule here with this framework is to only take an A+ setup until you are in profit. No B or C setups are allowed. Now, this can make a massive, massive difference, because most traders, I've been running a prop firm for 3 years. I see the data. Most traders will start their challenge with a loss, which means they're playing catch up from the very beginning. From literally day one, trade one, moment one, they are playing catch up. It makes it that much more difficult. It's hard to pass these challenges. 10% pass. So if you're going to start with a B+, a C- setup, whatever it is, you're really playing with fire. So again, if you are like me and you lean more on the conservative side, right? I said here, only take an A+ setup until you're in profit. I would only take an A+ setup always on the challenge. When I took my challenges, that wasn't necessarily the case with FTMO because there were time limits back in the day, but now that's no longer the case. So the reason that this works is that most traders fail because they start with random trades, they hit drawdown early, and they spend the rest of the challenge climbing out of a hole. Starting with high probability trades stacks the odds in your favor. Again, it's all about momentum. And here, I actually put a screenshot of the very first FTMO challenge that I took, and you could see the starting balance here, $0. The very first trades were up. okay? I spent a decent amount of time up and forth trying to hit that profit target. I was super nervous, but I knew I had a cushion to play with because I started at, there was that smooth equity curve all the way out because I waited for an A+ setup. So again, for this video, right, if you take one thing away, ask yourself, what does your perfect setup look like, right? Based on your strategy, whether you're a swing trader, a scalper, ICT, whatever it is, ask yourself, what does your perfect setup look like? You probably already have in your head an idea of what it looks like. So for me, that's a 4+ confluence trade, right? I use different confluences, so trend lines, key levels, Fibonacci, moving averages, psychological levels, or all sorts of stuff. I just look to see where they line up. That's a confluence. So I would look for an area where there's at least 4 of those things lining up. So that's the A+ setup filter system. It will really help you not fail your challenge, and it will really help you get one step closer to passing. But because you're still watching, I actually have a bonus framework for you. The bonus framework is the profit accelerator rule. Now, I mentioned when I took my FTMO challenges that there were 30-day time limits. Fortunately, that's no longer the case in the industry. That's actually why I started Lark Funding in 2022, because I just thought time limits were so dumb. If prop firms actually wanted traders to succeed, why are you forcing them to make 10% in 30 days? So what if there were still 30-day time limits? So ask yourself, it's kind of an interesting mental exercise to ask yourself, if there were still 30-day time limits, how would that change how you would approach a challenge? The answer, at least for me, is to leverage your gains by increasing your risk once you are up 3%. So for me, this is exactly what I did, and it really, really helped a lot. So let's say you have a 2-to-1 risk reward. You could then pass, based on the profit accelerator rule, you could then pass with a 10% profit target in only 4 trades. On our 2-step challenge at Lark Funding, it's 8%. So you could pass even faster. To run through the numbers, trade 1, you would risk 1% to make 2%. Trade 2, you would risk 1% to make another 2%. So now your account balance would be at 4%. Trade 3, you would then risk 2%. So you would double your risk. And because you have a 2-to-1 risk reward, you would make 4% and you would now be at 8%. So this is under the assumption that these are obviously wins, which hopefully they are, because you're taking on the A+ setup. So you're being super, super disciplined in filtering out what trades you're going to take. If they're not wins, that's fine. You remain at 1% risk. Or if your first trade is a loss, you go back to the original rule of cutting your risk in half, right? But assuming that they're still wins, you would then go on to trade 4. You're already at 8% balance. So at Lark Funding, you would already pass. But if it's a 10% target, you would risk another 2% and you would hit the profit target. Now, this is obviously assuming a 2-to-1 risk reward. If it's 1-to-1, the same rule applies. You would just have to take a couple of more trades. But it's really a powerful tool to leverage your gains by increasing your risk once you're up 3%. I think it's really important to know when to play defense and when to play offense in these challenges. Again, I'm always conservative. I lean more on the defense side, but sometimes you do have to put your foot on the gas. You do have to push a little bit to try and hit that profit target. If you're looking to take a prop firm challenge, I've been running Lark Funding for over 3 years now. It is demo prop trading minus the nonsense. I've been outspoken on this channel that I don't agree with the direction that the industry is going in 2025 by introducing all sorts of rules that hurt traders. So we have no consistency rules, no news restrictions, and no hidden rules. And we have been in business for over 3 years now. So if you're looking to take a prop firm challenge and become a funded trader, you can sign up for that down below. If not, there is Pip Munch, a free daily email newsletter for traders where I share fundamental analysis every single day, and hopefully it can help transform your trading, because I'm really, really a firm believer in fundamental analysis. And again, that's completely free. So you can sign up for that down below, and I will see you in the next one. Peace.